I'm Dan Higgins, the founder of Marylebone Partners, and in just a few minutes I'm going to explain what makes Majedie Investments relevant and different and the role it can play in your portfolio. We believe the investment landscape has changed dramatically. It's critical to understand that the playbook that's worked well for the past decade can't be depended upon any longer to protect and grow your wealth after the potential effects of inflation. What do I mean? Well, in all probability, interest rates going forward will be higher than we've all become accustomed to. There will be more cyclical and geopolitical volatility, and we expect to see more dispersion between and within asset classes. In our opinion, a conventional allocation to equities and bonds is unlikely to deliver inflation-beating returns. To prosper, it will be crucial to identify and access really compelling bottom-up ideas from around the globe which can deliver good outcomes in these changed conditions. And that's what Majedie Investments is designed to provide. At Marylebone Partners, we specialise in finding differentiated fundamental investments of this type. Equities lie at the heart of the proposition, but you won't find most of our investments in other portfolios. Our ability to access these opportunities reflects our experience, a global ideas network that we've built over nearly 3 decades, a repeatable process, and the hard work of our team. We turn over a lot of rocks to find a relatively small number of situations that look attractive to us, even in the changed world. For Majedie, we combine them through 3 complementary strategies in a single portfolio. The first of those we call special investments. SIs are eclectic co-investments, thematic ideas, and special purpose vehicles. And outside a handful of family offices, endowments, and a small part of the investment community, very few allocators ever get to see these opportunities. We have 3 golden rules. The first is they must come through a trusted source. Second, they must have high return potential. And third, they mustn't be too illiquid, even though we are very long term. Everything we invest in is mark to market regularly. The second strategy we call external managers. Here, we allocate to an elite group of funds that are managed by some of the world's best fundamental investors, experts in really specialist areas that are structurally inefficient. We favour boutique managers operating within niche sectors, regions, or with a very distinctive style bias. And again, most of the managers we invest with are unknown to or could not be accessed by most other allocators. And then third, we run a focus book of direct investments in public equities, which are selected by our in-house team. We invest in high quality companies at reasonable valuations, very often where there's some element of unappreciated positive change. After all that's happened over the past 3 years, we see opportunity today across all 3 of these strategies. This is a terrific time to be putting capital to work. And the investments we're finding have got very different return sources or structurally low correlation to one another. And that means that when we put them together in a portfolio, the outcome becomes really interesting. It's possible for us to achieve a degree of risk diversification without diluting return potential. So in a world that's changed, we believe Majedie Investments has a real role to play as a source of high quality total returns that sits very well alongside the other investments that shareholders may have made.